What's going on, dividend chasers? Dividend Bloodhound here with another investing episode. Welcome to my Freetrade weekly dividend portfolio review. It is great to see you once again if you are a returning viewer, and if you're not and you're brand new here, that's absolutely fantastic as well. This week my portfolio has taken a little bit of a dip with the rest of the market. It's not been so badly affected as my trading 212 portfolio because I'm invested mainly in dividends this way. However, Boeing has taken a little bit of a tumble, which is my top holding, and AT&T has taken a couple of points down as well based on its released earnings, but nothing to worry about. I've had another look. I keep them under constant review, these companies, and I've had a look at their fundamentals, and their free cash flow still more than covers their dividend. AT&T, this is, they've got free cash flow of 11 billion and the dividend costs 7 billion, so they've still got 4 billion spare to pay off some of their debt, and I'm aware that AT&T does have some significant debt. Hopefully this video will bring you some value. If that does happen, please hit that like button in the corner over there, or if you're brand new here, please hit the subscribe button over on this side to get notified when I release brand new content just like this, as in portfolio reviews, or some of my stock picks and other content that I hope to put out there that will help and bring you guys some value. That being said, let's roll the intro and get in there and have a look at my portfolio. Catch you in there. Hello again guys, welcome into my portfolio, and as you can see the current holding is £4,934, currently down £144.77 since I started, and there you can see the long-term trends that I'm on. While I'm here, I just want to do a quick plug for the free share that Freetrade are offering at the moment. Basically until the 31st of July, if you sign up and use a free share referral that I can easily supply you with, if you direct message me on Instagram at Dividend Bloodhound Investing, or you drop in the comments below that you'd like a free share, I can supply you one. And not only do you get the free share that you would have otherwise got up to £200, but you can win a free share of Tesla. And even with their recent dip, Tesla's share price is still worth well over £1,000. Imagine winning that and having that to deploy into your stock portfolio. If you wanted to sell it or if you wanted to keep it, that would be completely up to you, but a huge bonus as a competition win that is. And there can't be that many Freetrade referrals going on. Freetrade have got 200,000 customers now. That is exactly why they are running this competition. So I like the odds basically of getting a referral link, and you can potentially get a chance to win well over £1,000, and the odds are in your favour more so than they would be on the lottery, for example. Anyway, I digress. Let's actually have a look at how my portfolio is doing. So my biggest holding is still Boeing, 4 shares at £543, 26% down. That is quite a sizable chunk still. 173 a share, average price £183 a share. I'm currently £191 down. Yeah, a bit sore, but I do have faith in the company long term when eventually they can get the max return to flight, which looks like there is movement towards, and eventually this health crisis subsides. But I am fully aware that I'm in this for the next couple of years if I want to turn a profit on this one and then get the dividends back as well. Next up is AT&T at 19.183 shares. Their ex-dividend date has just passed. Positions were £443. I'm 15% down, or £82 currently, but I'm still a strong bull on this company. I really like the price that it's at now, and I will continue to buy to try and bring my average price per share down and my dividend payment received right up, which I'll be receiving next month. Next up is Visa, a position of 2.62 shares, £400 a share, up 1.473%, largely the same as before. 3M, 3.14 shares, £393, 0.24% down, largely the same as. AbbVie has suffered a slight hit based on where the portfolio was last week. I'm still 14% up, a position of 5 shares at £384. However, my investment gain has taken a little bit of a knock, and I'm now only £49 up instead of the 59 that I once was. Next is Coca-Cola. Their revenue seems pretty strong, hence the recovery. They were 10% down. Positions were £341 or 8.9 with 8.99 shares or 4% out. £16.51 down at the moment. Average share price of 39.7. Pepsi released their earnings this week. They've dropped back a little from where they were. They've sort of stayed the same really, but I do love the dividend from this company. At 2 shares, £2.89 up in terms of share price, but got a dividend inbound from them soon, and they released their earnings and they did better than expected. Home Depot is one of my biggest plus points at the moment. I've got 1.022 shares worth £212, 39% up still, or £59.81, which is a pretty decent return in anybody's book. Shell still down 31% at the moment, hovering around the £11.90 a share mode. Still going to average it's my biggest British stock. I'm still going to try and average this one down, and their return and their yield is £3, sorry, is 3.5%. That's still a pretty good dividend yield to me, and there's no tax to be paid on that one. IBM is at £202, minus 7% for 2.063 shares. Microsoft released its earnings this week, and yet the share price fell, even though it did strongly. If you have a look at the last couple of days, it has fell down at least a little bit, $10 or 5%, even though it released really strong earnings. I'm still £36 up on this one, as I bought in peak crisis, but just the stock market doesn't make a lot of sense at the moment. They've released some really good figures about Azure and LinkedIn being really well boosted, doing particularly well, and yet the share price still fell. Very strange. McDonald's has stayed pretty much where it was, £158, 3.3% up for the one share. CAT has seen a little bit of a recovery, £123 for my 1.1 shares, 7% up 5 or 6% since the last portfolio review. Nice little recovery going on there. Legal and General have dropped since the last portfolio review, only a little bit, down 4% or £4. Raytheon Technologies are continuing as they were for my 2.1 shares. I'm not 1,600% up, as you guys well know. It's because of the merger, it's a bit of a glitch, but I have made some money on this company. That will average down as I buy more shares, which I do plan to. UPS is currently 1.05 shares, £97, 29% up. I've made £21.90 on this one. Will be keeping hold of this one with the dividends intact. BP still suffering with the share price, the oil price crisis at the moment, and their revenue stream being heavily restricted, and £43 down. Average share price is £4.30. Still a hold for me in the long term. Unilever posted better than expected results, which sent the price up 5% in almost a day, and £3. So I'm now up £6 on this one based across my 2 shares. Disney still pretty much where we left it, £91 for the 1 share, 7% up. Nike exactly the same as well, £76 for the 1 share, 10% up. Starbucks 2% down, £62. That should show signs of recovery soon as coffee shops open back up. SP UK dividend companies, that's exactly where we left it. There's been no change there really. I'm a tiny little bit up. Carnival still massively down. We're now in single digits basically in terms of how much the stock is worth. My average share price is £17. I'm trying to slowly drip feed into bringing it down, but obviously I don't want to commit too much to it just in case they do go bankrupt and there is a high risk involved in these. I don't think the world could do without the world's biggest cruise company, but it's going to be a long time until they return to their former glory, I would say. GSK has dropped off a little bit as well. My 3 shares are worth £47. I'm 3.5% down on them. Received a dividend off the 2 shares here as well on the 9th of July of 38p. Not much has changed since then really. Commercial property I don't want to talk about. They're not paying any dividends and they just keep trending downwards. I'm trying to hold my nerve with them, but at the same time I'm really considering just cutting my losses with these guys now and just having done with it. I'm sick of seeing them. Next is all the stocks that are less than £50, so I'll just run through them quickly. Got 2 shares in Eurostoxx Dividend, 12% down, £29. A share in each of the FTSE 100 and the FTSE 250, pretty much where we left them. National Grid slightly back up now at 1%. In the last review it was down. 2 shares at £18. They took a little bit of a dip down to £8.50, but they've since recovered a little bit. Sage 11% up now. 2 shares were £14.99. It seems that I bought in at a decent price, which I knew, but I didn't expect to make 11% on them so quickly. Apple has taken a recent knock in line with the rest of the tech industry, but it's still well above where it was pre-crisis, and has completed the V-shaped recovery and went to the moon basically. Got no other idea what to go with that one. Very strong company. But tech is almost seen as the new gold at the moment, as people are sheltering their money there in the short term at least. And then last but not least, you got HSBC. I averaged down this position a little bit. It's still 24% down, but I now have 4 shares. Johnson & Johnson, I keep meaning to add to that position, but I just never quite get round to it. Pennon Group, the water company, 3% down, not doing too badly at all. Qualcomm, 7% up. Took a little bit of a knock since last week in line with the rest of US tech. I'm hopefully going to consolidate some of these positions again, so don't be surprised if in the next review some of these positions have gone, as long as I'm in the green on them. And you got Lockheed Martin. Some people are still arguing that they are overvalued at 386, even though they went to 435 pre-crisis and then went back up to just touched 400 again, 410, and then have crept back down since. Some people still argue that they are overvalued. I'm on the fence about this one. I do like the company, I do like the equipment that they produce as well, and their bottom line. And then last but not least, we have JLN Enviro, 4 shares, and basically where we left it. Then you have my watch list here of SP500, Indian Investment, Croda, Spirax, Halma, Intertech, Diageo, and Tate & Lyle. All of these companies are featured in my other UK investing videos, the links of which I will drop in the comments below, or you can see as a recommended if you have a look around my channel. All of them have got fantastic histories of growing dividends for the long time, all over 10 or 15 years of growing their dividend consecutively. Diego's got over 20 years, just as an example. Croda's got over 20 years. Halma's got well over 40 years. So exceptional companies. And then the last one there is a SP500, which everybody, in my opinion, everybody should have VUSA in their portfolio. And that wraps us up here really. I will catch you in the outside world, where we'll just have a little wash up. See you back out there. Hello again guys, welcome back to the real world. I hope you enjoyed the portfolio review and it brought you some value. Not a great deal of change there really, a couple of ups and downs, but no major movements fortunately, which is what I want for a dividend portfolio. Apart from Boeing, which is sort of letting the side down, I'm more than happy with all the others. Carnival is another bad boy of the group, which I'm looking to average down as well, and then potentially as soon as it goes green, ditch it or see where we are when we come to making that decision. I'm just going to drip feed into average down at the moment because it is starting to get on my nerves. So is commercial property as well. But we all live and learn from these decisions. I wouldn't say they were investing mistakes, just nobody knew what was going to go on with a global health crisis at the end of the day. I hope you've enjoyed the video. Thank you so much for sticking around to the end. Please, if you haven't already, hit the like button over in that corner there. It really helps the channel out and really helps me out and lets me know that the work I am doing is being well received by you guys, and that's what it's all about at the end of the day. And if you're brand new to the channel, then it would be fantastic if you could hit the subscribe button, tick the notification bell so you get to see my portfolio reviews on a weekly basis and the stock picks that I will hopefully bring to you guys as well. That being said, nothing left to say except thank you very much for watching, and I'll see you in the next episode. Goodbye.